all has not been well in candy land. But there's a hero rising up to bring out the cheer in chocolate. Ha 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 ha. Okay. That was a bit too dramatic, but it drives home the point about how Hershey and the business of chocolate are trying to survive and thrive from the heat of inflation and high cocoa prices. Hershey reported strong net sales growth of 26% in Q2 2025, driven by robust performance in North America confectionery and salty snacks. The company achieved a significant share gain of approximately 90 basis points in the U.S. retail market for candy, mint, and gum. Hershey's innovative product launches, such as the Pokémon Kiss and Reese's Oreo Cup, are driving strong consumer engagement and repeat purchases. The company's strategic pricing actions and productivity initiatives are expected to restore adjusted gross margins by over 500 basis points in 2026. Despite the strong net sales growth, the Hershey Company reported a decline in adjusted earnings per share by 4.7% year-over-year, impacted by higher commodity costs and increased tax rates. Net sales trends within the international segment were below expectations due to unfavorable currency translation and softer category growth in Mexico. The company anticipates a decline in adjusted earnings per share by 36% to 38% for the full year, primarily due to higher cocoa costs and tariffs. Adjusted gross margin decreased by 510 basis points in Q2 2025, affected by commodity inflation and incremental tariff expenses. Management discussed the recent price increase for the U.S. confection portfolio, which is expected to deliver an estimated 16 points of pricing contribution and benefit adjusted gross margin without significantly affecting sales for 2025. Regarding the ongoing cocoa inflation, Hershey's management noted that despite some retreat in cocoa prices, they remain volatile and elevated. The company anticipates inflation in cocoa input costs in 2026 due to robust hedging practices and is implementing innovative sourcing and hedging strategies to manage costs. The strong performance in North America confectionery and salty snack segments was driven by net price realization and volume growth. The North America confectionery segment saw a 32% net sales growth, while salty snacks increased by 8.8%, supported by innovation and distribution gains. The international segment's performance was affected by foreign currency translation, which posed a 6-point headwind. Organic constant currency net sales grew by 10%, but volume was below expectations due to category softness in Mexico and lower export demand. When looking at the industry-wide landscape, Hershey hasn't been the only one considering price increases. Mondelez International and the Cheesecake Factory have recently announced price increases for their products. Hershey's CEO Michelle Buck believes the company has found the right balance for price increases on candy and gum, which will allow it to maintain sales despite soaring cocoa prices. In July, Hershey implemented price changes for much of its domestic confection division, including charging more and altering package design and size. According to Buck, the price elasticity ratio is expected to be 1-to-1, meaning demand will decrease by the same percentage as the price increase, keeping sales strong and earnings stable for 2026. Mondelez International, another company dealing with high cocoa prices, is also raising prices without expecting a significant impact on demand. The company's CFO Luca Zaramella stated that by being strategic about price increases in packaging, they believe there won't be a substantial volume repercussion for customer consumption. Chocolate prices have increased by 30% to 50% over the last 2 years, leading consumers to buy smaller quantities and less frequently. Hershey's price increase aims to ensure 75% of its products cost less than $4, while Mondelez International focuses on having many products priced between $3 and $4. Then, since Hershey has focused more on non-chocolate candy, the Jolly Rancher brand is experiencing significant growth, with sales reaching $400 million in 2024, a 25% increase from the prior year. The brand's success can be attributed to its innovative approach, which has expanded its product line beyond traditional hard candy to include gummies, ropes, and freeze-dried candies. According to Alan Dark, director of Hershey's Sweets portfolio, Jolly Rancher's bold fruit flavors, such as watermelon and blue raspberry, have provided opportunities to bring popular flavors into other textures. The brand's innovation strategy, which began in 2020 with the relaunch of Jolly Rancher gummies, has paid off. The introduction of Jolly Rancher ropes in 2024 featuring a chewy outer layer and soft, fruit-flavored filling, and Jolly Rancher freeze-dried in 2025, offering a unique, airy texture, have contributed to the brand's growth. As a result, Jolly Rancher's dependence on its iconic hard candy has decreased, with less than half of the brand's sales today coming from hard candy, down from about 80% a decade ago. Jolly Rancher's ability to play across multiple sweets categories is both freeing and challenging, allowing the brand to quickly enter new trends or roll out seasonal offerings. However, this freedom also requires executives to exercise restraint and prioritize existing offerings. The brand has climbed to the number 5 spot among non-chocolate sweets, up from number 11 just 3 years ago. With demand surging, Hershey is focusing on growing its existing offerings, including ropes and freeze-dried, rather than expanding the Jolly Rancher brand into new categories.